Well, welcome, sir. We'll just allow the other students to log in, then we will start. Okay, just wait for a couple of more minutes. Students, just check whether screen is visible, and just 2 or 3 students just post it yes or no. Sir, student has said that they have confirmed it is clear and visible. You can start the class, sir. All right, Kunal. Okay. One more minute and I will start. Okay. Sure, sir. I see 130 attendees. One more minute and then I will start. Sure. Somebody has asked me to explain the down payment process. Yes. It is with the same topic which I'm going to start. Okay. The first thing, what is down payment? Down payment is nothing but the advances. Yeah. So very common in business, right? You make payments in advances, or probably your business may receive some payments in advance. All right. Now, how was this particular transactions tackled in SAP? Now, your normal purchases, your normal sales, your receipt of money, you making payments, your credit memos, they're all the normal transactions in your SAP. But when it comes to certain transactions, like say your bank guarantees, your advances, your security deposits, let me add a few more. Earlier, probably you would have heard about some financial instruments like hundi, bills. So all these were also, now these concepts are outdated, right? Now, for the, suppose you may pay some rental deposit in advance. So how is this particular transactions? Let me stick to advances. I'm just giving you examples of a few transactions which comprise or which make up the special general ledger transactions. Okay. So such transactions, they classify as special general ledger transactions in SAP. The way these operations are taking place in SAP are to be understood by SAP, it takes a different route. Now, probably a purchase invoice or a sales invoice, you have a thing, you just enter the invoices in the SAP system and you're done with it. Okay. But now, whenever you're talking about these specific transactions, which qualify as the special transactions in SAP, they follow a methodology. They follow a unique path. Okay. So, and which is why SAP has taken up this route to tackle these transactions. Now, whenever you're making a payment in advance, or I'm just taking the advances as a simple example. This applies to other categories of the special transactions also. Now, how does it actually start? How does the advances either made or received? I pay money in advance and I receive money in advance. So how do these transactions actually trigger? It starts with a down payment request. My customer is asking me, so he had asked me to supply 100 items, but I don't have them in my stock because I'm producing a high demand product. So what I do, he pays me some money so that in the next lot, when I produce, my sale is already booked. Yeah. Same thing happens with your vendor also. Now what happens? The customer requests that this advance, is it possible? And he raises a request. So how does SAP understand that a down payment request is made? It is through a option called as your down payment request. Clear? And this is referred to as a noted item in SAP. Why? Because till now the transaction has not happened. The customer or you have not made any money as payment. You have not paid any money. It is just a request for you to accept or make a advance payment. That's so it doesn't have any financial impact. Now in the next step, these are the steps how SAP deals with the special general ledger transactions or such transactions. Now what happens? Now there is an exchange of money. Okay, so this is noted in the SAP system, or this is entered into the SAP system. Now, this is reflected separately as a special general ledger transaction. This is reflected in your reports in a special way. All right. Now, how do you settle once when the customer has made some payment to you as advance? How do you settle this money? You are going to settle this money by the form of supplying the items. You produce the goods and supply it back to the customer. All right. Now, what do you do after supplying the items? You raise an invoice. You raise a sales invoice against the customer, and you are matching. So, what is settling of advances? Matching the open invoice with the advances. You are matching the invoice which you have raised, the sales invoice, with the amount of advance whatever you have received. This is your settle or clearing of advances. Clear or settle the advances. What do you do here? You actually match the open invoice with the money what you have received from the customer. Clear? Did you understand the concept of advances? Thank you so much. That was so very nice of you. Thank you so much. Thank you. So I hope all the points were answered as regards the advances. So let us go back to our slides. This is exactly what it explains the whole process of your advances. He has explained the process of advances through a customer. It applies to the vendor also. In case of a vendor, you pay the advance, you make the payment in advance, and he supplies the raw materials later. Clear? So he has explained what is a down payment. A down payment made by the customer prior to the performance of the sales service. Even before you have sold, you have the down payment starting. And one more important point which I missed out. For SAP to identify the special general ledger transactions, for each and every, for security deposit, for bank guarantee, for advances, you will have to have a set of new reconciliation accounts which will accept these transactions. So one reconciliation account for your normal sales, which we discussed maybe say 2 or 3 days ago. It connects the finance module to your accounts payable or your accounts receivable or your assets module. Now this reconciliation account, when we talk about advances or security deposits or bank guarantees or bill of exchange. Okay, I'm not very sure about bills of exchange. Okay, let me not get into that. So when such transactions are identified, I as a consultant, what do? I create new reconciliation accounts to accept these transactions. All right. This is one more information what I wanted to add. Now, see, it is called as an alternative reconciliation account. Yeah. Same thing happens with your payables also. So you must create a alternative reconciliation account for your down payments. Right? So somebody was asking me regards the bank guarantees or something. I don't remember the question, but now are you getting these things, how SAP handles this? Yeah. So you can just go through the, you can click on each of the things and it will, down payment requests are noted items. I think you are okay with this term now, noted item. So, which is just as an information. It is informative. Like you have supportive texts in your balance sheet where it explains certain things. The same thing happens in your noted items also. This is just for information, that is all. Doesn't have any financial impact. This is the step where the actual transaction takes place. Okay. Can you see this? There is an effect on the financial statements. Now you have the invoice happening. The down payment is matched against the invoice and is clear. The items are matched and the advances are subsequently cleared. So there is no indication in the SAP system that there is an advance. And one more beautiful thing in SAP is, now suppose I have received an advance from a customer called Messrs A Limited. Right? Now, how does SAP understand I'm transacting with Messrs A Limited? He is my customer. So I have normal transactions. I'm selling, he is paying. All these are normal transactions. Perfect. Now, whenever Messrs A Limited pays some money in advance, now when I enter the sale invoice after the advance is received, you will see that the SAP system prompts or throws up an information saying that there is an advance against this particular customer or vendor. See how beautifully the system is designed. Once you make an advance payment or receive an advance payment, whenever you're transacting with that relevant customer or the vendor, there is a indication from the SAP system saying that there is a advance pending against this particular vendor or customer. This really happens. Yes, you can see the SAP system prompting or throwing up that information. Clear? The form of payment guarantee controls how the payment of just for your general read. Okay, so this is about your bank guarantees or whatever. This also is one of the, this also qualifies as your special general ledger transaction. Okay, so somebody was asking me about the bank guarantees, maybe say yesterday or something, if I remember. Manage incoming payment transaction. So it is your AP, no, sorry, AR, where the customers are making the payments against your sales. Clear? He has explained the process. I think it should be very simple for you to understand. Clear? So correspondence. I think probably you may come across a topic called as correspondence. Now, we have seen one kind of correspondence, right? So rather two types, or rather two forms of correspondences. What are they? One is your balance confirmations, where you are striking a balance with your vendor or your customers. The next one is your dunning. I explained the process of dunning, where you are automating the process of reminding the customers for their overdue. So this also is a form of correspondence. Okay, as he mentioned this, see, balance confirmation. There has to be a reference to dunning also. Still okay, not a problem. Yeah. So he has just explained what you mean by correspondence, right? So just read them in your leisure. Very generic. Okay. By now you should know what is a company code information. What is company code data? As far as a customer or something is, okay, it is finance related information. Okay. So the correspondence can be generated ad hoc basis. That means as and when I require. If I want to send a balance confirmation today, I can do it. And I can also define I can also have a schedule, just like I had the schedule for your automatic payment program. I can also send reminders to my customers. I can carry out my dunning process or my dunning procedure on a timely basis. Clear? It's just a typical reading, does not require any explanation from my end. I think so. So So he has so as I said, each and every activity, each and every screen in SAP has a unique program. You cannot see an SAP screen without the relevant program. Okay, so similarly, your correspondences, they are also, whether you are sending a correspondence to your vendor or the customer, the relevant programs, they act to generate the report. So how do you normally, so what you do is, normally in our live SAP environment, we direct the output. Suppose I'm generating a statement. Let me assume that this program is for balance confirmation. Okay, I'm just assuming. Okay, now what I do, I direct this program to print the output to my printer. So while executing this particular activity, SAP will ask you to direct this output to a printer or maybe to your screen. So in that case, you direct this particular program to your printer. Transaction codes. You are very well aware of what is a transaction code. Yeah. So you will definitely take some time to understand all this, but your understanding need not be in such a depth. Okay. So just have a feel of what SAP can do. Okay. If somebody asks you, can you give me a few examples of what is correspondence in SAP? You know what answers to give, right? So now we discussed the dunning. One of the most important of the correspondence process. Okay. And also your balance confirmation. That is also equally important. So what is dunning? Dunning letter summarizes the overdue invoices. This on the right is what you see, or how one consultant, SAP FI consultant, creates the dunning procedure. All right. This is typically the job of a consultant. All right. Just like you had so many settings to be done in your automatic payment program, there are a few settings to be done even during the dunning program. Clear? So includes the following configuration steps. First one is you define the dunning procedure. Don't bother about the transaction codes and all. Okay. Dunning level. Now, what is dunning level? Dunning level is how many times can I allow the system to remind the customer? Do I have a limit, or does SAP have, does it set up any limits as to how many times I can remind my customer? So normally SAP has 9 levels, maximum of 9 dunning letters which can be sent. Only 9 times. But in the real practice, not more than 3 times you are allowed to remind a customer, especially when we are working on projects in the Europe belt. What normally happens is, if at all the reminder level or the dunning level reaches the third level, immediately the intimation goes to the court. You will have to make all the settlements with the involvement of the court. See, such is the seriousness of this dunning levels. Clear? But have I ever sent 9 reminders to my customers in my experience? No, not more than 3. All right. And you should also know that between the reminders, I can also set up the time limit. Meaning, today I send a reminder. So what should the reminders take into consideration? It should take into consideration, just a moment, the dunning. Where is dunning? So what should the procedure consider? The time from which the is pending. For how many days the invoice is pending? Because you remember we spoke about the payment terms when we were discussing the automatic payment program. Similarly, you might have entered into an understanding with your customer saying that 15 days is a time, or maybe say 1 month is your time before which you need to make a payment. All right. So, or maybe say 30 days. So let me assume that I raise an invoice on the 1st of July. So it becomes due for payment on the 31st of July, 30 days have gone. So let me say I'm very generous. My company is very generous. I give the customer 2 to 3 days grace. After the payment becomes due, again I give him a breather for 2 to 3 days within which he can make the payment. Grace periods. Including the grace periods. It is only after the timeline, the original timeline, plus the grace periods, only and only after both the periods I have exceeded, then only you can set the dunning process. Then only you can trigger the reminder process. Yeah. So why I am, though it may be a little hazy for you to understand for this current moment, but these are the concepts which you may encounter. Correct. So in some cases, I may not even ask the system to done for some elite customers. If they are doing a lot of business with me, okay, and I have a lot of revenue from particular customers, I would not allow the system to done. So I would block such elite customers from the process of dunning itself. I may not even bother. Because after studying their history and their payment credibility, I'm very sure that even after they cross their overdue and as well as their grace periods, they will definitely make a payment. Yeah, their receipts will never be bad debts. They can never be bad debts. Okay, I'm including the typical accounting terms also. All right. So this is exactly what I said. If we don't want to run a dunning program, that also can be told to the SAP system in the dunning procedure. This also we can mention. or this is a dispute management. Okay. There's also something called as dispute. Just go through these slides. Okay. Let us spend a few seconds to understand. Customer provides information, contact, the complaint. Just read them through. Very, very general. Okay. So probably he's referring to your receivables getting converted into bad debts. See, he says payment performance and risk. Okay. So this automatically leads to your bad debts increasing, which is not advisable as far as a business is concerned. You obviously will have some bad debts, but if it is within the limits, it is still okay. Please read them through all the slides. Very, very general. And as I've always said, connect all these things into your normal business. Yeah. Whatever you face on a day-to-day basis, just try to relate it with that. Every question of yours will be answered. Absolutely no problem. You are actually the cream of the educated class because CMA, CAs, they are a rare breed, right? Don't worry about what is all this. It is self-explanatory. Don't bother. See, actually, most of the processes, if you read this, it is no different from how actually it is done in the ECC platform. Okay. I just gave you an example, lead to cash. Now he has come to the sales order to receivables integration. This is very, very premature because we have still not started the integration process. So let me mark the slide. Just a moment, just a moment. I'll mark the slide number so that I can revisit when I deal with that topic. Slide number 429. Okay, I have made note. So this slide, why I said that I may or may not even come back to this slide, because all this will be there in your second unit. Which unit? Second unit, which talks about the business processes. So your lead to cash is nothing but your FI and sales and distribution module integration, which earlier in the ECC, we used to call it as the order to cash, O2C. I think I have already made note of that. Lead to cash. Earlier it was order to cash. It was O2C. Now it is lead to cash. Not except for the nomenclature change. The process or the idea or the rationale behind the process is the same. Clear? So he is just explaining the whole process of your lead to cash. He's talking about the typical reports in SAP. Suppose you want to know how much money should I receive from Measures A Limited. I can go to the individual customer information and get the balance. Clear? Periodic accounting statements. Okay, he's talking about the balance confirmation also. What is a periodic account statement? Suppose I want to know the transactions with Measures A Limited from 1st of July to the 11th of July. Whatever has happened with Measures A Limited from the 1st of this month to till today, specified using a pre-configured variant. Okay, that is exactly what he wants to say. Isn't this self-explanatory? Manual clearing is you select the invoice from the SAP system. Which invoice is going to get cleared against which payment? All right. Let us see what he has explained about the automatic. Has he explained about the automatic? The same thing. Okay. Let me concentrate on something which may not be, which probably we would not have touched till now. So I'm going to keep silent about this Dunning, okay? Because you already know what it is. So again, you can feel that some of the slides are repetitive, right? But maybe he is adding more information on the repeated slide, okay? You're okay with this now? 1 to 9. So the minimum times the customer can be informed about his outstanding is 1. The maximum is 9. Okay. Now what happens? I was talking to you about the grace periods also. I think this also should not be new to you now. Minimum amounts. Now, what is the concept of minimum amounts? The concept of minimum amounts is this. Now, I have a very, very important customer of mine, Measures A Limited. So I would configure the system in such a way that unless and until Measures A Limited does not accumulate sales invoices worth 1 lakh, the system should not even consider Measures A Limited to be picked up for the reminder process, for the dunning process. So Measures A Limited should have accumulated at least an outstanding of 1 lakh rupees, so that the system would pick him up for dunning. If it is less than 1 lakh, the system doesn't even pick him up. Clear? This is the concept of minimum amounts. Now, There is concept of charges also. Now suppose I want to send a reminder to Measures B Limited. Okay. So like that, I have n number of customers for me to send reminders. What do I do? So first and the foremost, I'll have to print all these reminders. That is, I'm going to charge all these printing charges on my customer. If I want to inform them through a post, I'm incurring some cost towards postage also. See, you can as well tell, you can even tell me that why can't I send it through an email? Perfectly good. Okay. But to penalize the customer for the late payment or for the non-payment, I have certain charges also loaded against him, which he has to bear. All right. So if 100 rupees is the invoice and I spend say 10 rupees for the process of reminding him, so he needs to pay me not 100 but 110 rupees. 100 plus charges of rupees 10. Clear? Interests. This is actually a concept, a different concept called as interest calculation. Okay, which is away from our topic. Now, if the amount is huge, if the customer has accumulated a few lakhs, if at all I had received, wouldn't the bank give me interest? If at all he had made payments at the right time, wouldn't I enjoy the interest on this particular receipt? So in which case, on the reverse, I penalize my customer to pay the interest also. Clear? Now there is a separate topic called as interest calculation. If it is there, we'll worry about it. If it is not there, let us not even talk about it. But all you should know is these are the components within your Dunning procedure. All right. See how beautifully the system has thought about all these things and how it is made possible. Whatever is possible physically, that you convert it into the SAP system, right? Create balance confirmation, manage. So we are all familiar with all this. Yeah. See, as I said, the balance confirmation is a mandatory activity. This is the first and the foremost report what I would generate. Maybe periodically or at least at the year end. Year end, it is a must. Okay. Somebody was asking me what is foreign currency evaluation. What is basically your foreign currency valuation? Now suppose I'm exporting, or let me say I'm importing goods. So what do I mean by import and export? Simply said, I'm dealing with foreign currency. So the day actually the transaction has happened in, let us say, US dollars. So it has happened on the 25th of June. The dollar rate was some X. Now, today I am closing that transaction for that import or for that export, whatever. I'm releasing the payment in dollars. What is the rate as of today? Okay, how this is being achieved in the system, it's a different story. How the SAP system is able to understand the exchange rate as of 25th of June and the exchange rate as of today. Okay, it is how the consultant wants to work around. Okay, that is, or how the implementing business wants to address this issue. Here, so if have I made a profit or am I in loss during this particular transaction is your foreign currency evaluation, right? There is a program. Has he referred to a program? Just go through what this is. Okay. We were talking about bad debts. Correct. So there is also a standard report which gives you from how long the debtors are pending. How old is my debtors? Okay, that is also standard report. So I think that this should be giving you the whole picture about this. Can you see the special GL indicator? Special GL. What is our next topic? Let me just check one second. Lesson summary. So what have we understood from AR and AP? So there was just a video which I skipped. Oh, wonderful. So what did you understand? It is also like your customers and vendors, subledgers. Okay. Now let me just take up a few questions if you have any. Oh, thank you, Kunal. I just saw you explain what is the reason for.
Yes, sir.
You have explained what is the reason for. Thank you so much.
Most welcome, sir.
So we'll just take a breather for 2 minutes. Let me take up. Probably I would try to avoid getting into a new topic, instead of which I will take you to a very generic topic, very general. We will take up this assets maybe the next week. Sounds good? Okay, because once I start, it has to go in a flow. Once we start asset accounting, the information has to have a definite flow. And since we are not meeting tomorrow and the day after, probably it may not be advisable for me to start asset accounting because lots and lots of new terminologies from your normal accounting language. All right. So slide number is 450. Okay, I'll just keep quiet for 2 to 3 minutes. And if at all you have any doubts as regards to previous topics, please let me know. 2 more minutes and I will start. All right. So I said I will not be starting with the asset accounting module as of today. OK, so we'll keep this or we'll reserve this for the next week. Now I will talk to you about how or a story or a life history of a SAP project. Even before I start off on the life cycle, what are the different types of SAP projects? Implementation projects, these are the 4 different kinds of SAP projects. I mean SAP projects. Implementing SAP, implementation project. What does it mean? Now, an organization was using a non-SAP system earlier. Now it wants to start working on the SAP system for its day-to-day activities. Okay? Whatever it was doing in the non-SAP system, what is a non-SAP system called? It is called as a legacy system, which I've already told you. I think in the very initial discussions, we had what is a non-SAP system called? Yeah. So movement of legacy to SAP. Non-SAP to SAP. So it starts from the scratch. What is an upgrade project? Upgradation, when we spoke about the earlier architecture, R1 to R2, R2 to R3, ECC to HANA. Typical examples of upgrading from one previous version of SAP to the latest version of SAP. Okay. Rollout. In this case, not the whole of the concept is changed, but the concepts have revised. In FI, there is some concept which has undergone a change. So there is a concept of rollout projects. Now, support projects. Now, I have implemented SAP in a new company. Okay, Messrs XYZ Limited is my implementing partner. Messrs XYZ Limited was using a non-SAP system earlier. Now, I from IBM has implemented SAP for Messrs XYZ Limited. Just an example. Okay. Now, after I implement SAP, my IBM team can it simply walk out? What happens to Messrs ABC Limited if one of the users, one of the employees does not is or rather is not able to enter a transaction, or there is some error while the end users, they were making some entries, they had some errors. Will they be in a position to resolve those errors? Because you cannot expect them to know SAP. They are trained on SAP, no doubt, but are they capable enough to resolve any errors in SAP? They are not, because they have not gone into the building up of the system. Right? So from the implementing team, what have I done? I know the system inside out. Right? So after implementing, there is a different team which takes care of the issues which come up later. Clear? This is your support projects. Now, how does a project start? Let it be any of the projects. Now in ECC, the methodology adopted for the implementation steps is called as ASAP, accelerated SAP. A stands for accelerated. In HANA, instead of the ASAP methodology, it is called as the what is it called as? Let me remember the name. Now, as far as the ASAP methodology is concerned, except for the change in the name, the steps more or less they remain the same in both ECC as well as your HANA. Okay, we are talking about ASAP. Here we talk about Activate methodology. By and large, both they have the same methodology steps, except for a few changes in the names here and there. Right? So I will talk typically about your ECC SAP. Now, initial preparation or requirement gathering, by whatever name you want to call, you can call the first. Initial preparation phase, requirement gathering stage, by whatever you can call.